Welcome to the Under Contract podcast.
You know, it's really weird. I hate the sound of my voice.
Well, you have a radio announcer's voice.
I can't stand it.
You did our Christmas play. So, well, man, let's just dive right into it. Ladies and gentlemen, I have my friend here, David Rush with Momentum Insurance. Round of applause for him. How's it going, man? How are you?
Fantastic, buddy. Thanks for having me.
So let's dive right in. So you're with Momentum Insurance. How long have you been in the insurance game?
I got my insurance license in October of 2008, and I was really focusing on Medicare and health insurance, and just kind of fell into the home and auto side of it about 2009, April of 2009. And it was kind of funny. I was really just kind of doing that almost part-time, and health insurance took off for me really well. And the Medicare thing was great until about 2012 when all the ACA changes came into effect, which luckily I had diversified.
What is ACA?
Affordable Care Act.
Oh, okay.
Yeah,
okay.
So it really cut out a lot of us agents on the individual side of the business, and which is, it is what it is. But
Gotta love the government just taking your job.
Exactly. Yes, I was phased out, but you know, at that time we had kind of grown into doing a lot more, you know, home and auto, and I'd started doing some commercial stuff as well. So it was just a good time. It was a good time to transition really and jump in with both feet.
Yeah.
You know, and so I kind of gave up the health insurance thing. I did not take any more appointments on Medicare stuff. So I really have focused primarily on home, auto, and commercial.
Yeah. Well, if you were doing good in 08 and home, that was the bottom. So it was just an upward trajectory from there.
There was no place to go but up.
Yeah. 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 Me and Clay Smith went pretty deep on the 2008 bubble when I had him on.
Oh, yeah.
Yeah. He knows a lot more what he's talking about than me, but.
Well, it was interesting. I was coming out of the mortgage industry.
You were a lender?
I was a lender.
I did not know that.
Yes. Yes. I did not survive the demise of the mortgage markets. So like I say, it was a God thing. I was very blessed to make the transition from mortgages to, the insurance world. So.
Well, being able to adapt is a hallmark of all the legends in any profession, really. Sometimes you just got to kind of start over, you know.
And I did. I guess I started my insurance career at the ripe old age of 42.
Yeah.
Yeah. It was a interesting transition, but like I say, I'm very blessed, and it worked out well.
So you're with Momentum. Is that a franchise, or is that a company you started, or what?
Momentum is just a large independent agency. The two gentlemen that started Momentum Insurance were actually with American National for many years, and they split off from American National and went independent. And it's John Parker and Ludus Edekin that started it quite some time before I came on.
In Texas?
Yes, sir. Yeah,
okay.
They're out of the Woodlands.
Okay.
And so I'm set up now. I guess I'm a net branch of Momentum Insurance.
Okay. And so whenever we talked about where we were going to have this podcast, I said you're right by your office, but y'all are no longer over there in League City, or are you?
No. I sold my equity in the building.
Gotcha.
To another, actually to my CPA.
Yeah. Oh.
Yeah, my CPA bought me out of my building.
Yeah. Well, that's cool. I work with my CPA too, so
I think I'm paying him too much money.
So what areas do you serve? I mean, can you write a policy if someone calls you from out of state? Can you write policies there, or?
I'm only licensed in Texas. In Texas.
So the license is per whatever state you're in.
Yes.
Like real estate.
If you're going to work outside of the state, you can get a reciprocal state license. But to me, I kind of like to focus on what I know, and I don't know anything about the perils and things that they deal with in Louisiana.
Yeah.
So I just like to stick with Texas. I have a lot of business in Austin, a lot of commercial business in Austin, and some home and auto, and a little bit of commercial in Dallas, Wichita Falls. I insure. Yeah. Actually, I guess I'll go all the way to Lubbock. I insure a couple storage facilities in Lubbock, Texas.
Yeah.
Yeah. So we're kind of all over the state, I guess. But Most of it is, just greater Houston area.
Yeah. Well, I know how expensive that storage facility insurance is.
Yes, you do.
Golly. So what all products do you insure? So you said home, auto, commercial stuff,
So home and
properties
auto,
mainly?
yeah, home and auto kind of speaks for itself, right? So we do all different types of ownership type properties. So we, of course, owner occupied, tenant occupied, non-owner occupied, and do investment properties for people. We can do renter's insurance for somebody that's renting a house. That kind of covers that gamut. Auto, again, kind of speaks for itself. We do autos, boats, motorcycles, UTVs, RVs, travel trailers. That all falls under the auto umbrella. And then commercial is just a wide open thing. Like there's just so many avenues with commercial. We kind of primarily focus on, general liability, workers' comp. We do a lot of professional liability, E&O coverage for, title companies and real estate offices, architects, things like that actually have a professional exposure. I actually insure several attorneys, which is kind of scary to write those policies,
Why is that?
Well, just because they know more about the policy than I do, right?
Oh, yeah.
The policies are written by attorneys.
Yeah.
So for a lot of the professional liability stuff, I use a group out of Dallas. It's called Professional Lines Underwriter Services, and it's owned by attorneys. So they really know what they're doing when it comes to professional liability.
So it's a liability policy for, it's a liability policy for an attorney.
Well, I mean, so
like in what event would they make a claim?
So if you have like a breach of fiduciary responsibility, like they feel like your client feels like you did not represent them correctly, then
to have to fight them legally, they could just file a claim and have most of that paid for.
Well, so what you really want is the cost of the defense on the insurance carrier, right? So they always say you can beat the rap, but you can't beat the ride. It's really easy to sue somebody. So even an attorney.
Yeah.
So, to file the lawsuit, even though they probably aren't going to win that lawsuit, right? I mean, a lot of them is just frivolous suits. You still have a duty to defend.
Yeah.
So you still have to answer the call. And so you really want those expense costs to be on the insurance carrier. You don't want to have to hire your own attorneys and things like that.
Yeah.
And of course, those guys, that's what they do. So
it would tie you up. I mean, as an attorney, if you're trying to fight your own case,
sure.
Like, yeah, you would want some compensation.
Of course. And of course, realtors, y'all have, errors and omissions policies as well, professional liability that covers you in the event of somebody saying, oh, you didn't tell me this, you didn't disclose this properly. Or
hopefully, hope to God I never have to use it.
Let's hope.
Yeah. So when someone, we'll kind of dive into my side of it with homeowners. That's something that every buyer is going to have to provide before closing, even homeowners insurance quotes. So if someone contacts you, like the way I did, because you insured my house, what's the process from, hey, we need homeowners and here's the address. Then what happens from then on?
Well, from then, I mean, we get a little more information than just name and, address. Every house is different. I mean, this house for 3 different people could be 3 different prices depending on their claims history. And there's even we don't pull credit, but there's a credit scoring factor with every insurance policy just about you that we quote. And it's a soft hit. So we're not pulling credit, but they do look at the credit profiles.
I did not know that.
Yeah. Every single one. Very, very few carriers will write without pulling those clue reports. Swift is one that they write, they'll write it just.
I think that's what I have.
Yeah. You give the property address and it spits out a quote.
Yeah.
But on our end, we get all the information. We look up the, the property and, try and find out, if it's an older home, the age of the roof, if plumbing's been updated, if electrical's been updated, the age of the heater, the age of the water heater.
And that's what an adjuster does. They come out and look at all that.
No. An adjuster actually looks if you have a claim.
Oh, okay.
Right. So, all of our quoting software has, some type of replacement cost estimators. Mm. So it'll, based on the square footage of the house, things like, does it have granite countertops and what type of floors do you have? And the finish quality, is it builder grade or is it a custom home? So they'll calculate replacement cost based on that. And replacement cost, I guess, while we're on the subject, has nothing to do with market value. Okay, so if you buy...
It's the materials, right?
Well, so here's the thing. In the event of a complete loss...
Like a burns to the ground.
Burns to the ground. What's it going to cost to rebuild it exactly like it was? And so here's where you kind of get into some varying factors. So let's say I build a 2,500 square foot home, brand new here in League City, right? You know, replacement cost on a 2,500 square foot home. Let's say it's $150 a square foot. So it's $375,000 replacement cost on that house. Well, the market value right now, values are up. So that home might sell for $500,000.
Right.
It gets even worse in areas like the Heights or Bel Air, where, you know, they're building these 3 stories, you know, it's 2,000 square feet going straight up, and they're getting damn near $1 million for these things, right?
Yeah.
So,
and they're this far away from each other. I always wondered, like, if one catches fire, what happens, man?
They do have a lot of firewalls built between them. There's certainly some protection there. But, you know, the replacement cost is going to be much lower than the market value.
Right.
Because again, you know, a 5,000 square foot lot over there might be $500,000.
Well, you got to think, if your house burns to the ground, your slab and your plumbing are still all there.
Typically, you know, concrete is not necessarily fireproof.
Really?
Yeah. So you got to figure the heat is going to expand the metal in the concrete and the foundation and everything. So a lot of times you're going to have a lot of damage even to the concrete. And of course, plumbing, you can have complete meltdown so a lot of times if it's a total loss like that, they just have to scrape the ground and start over.
Really? So they break up the slab?
It depends on the how severe the fire was.
Yeah.
You know,
you have to have an engineer go look at it or something, maybe.
Oh Lord, yeah. I'm sure. You know, when you start rebuilding and pulling permits and stuff, it's, you know, you're going to be looking at structural engineers and things like that. That's beyond my pay grade.
Yeah.
But yeah. So anyway, that's kind of how the whole process rolls out. Is we run our quotes. We have some quoting software. We put all the parameters in there and all the customer's information, and it, you know, kind of helps us narrow down what our best choices are going to be.
And when you say choices, you mean company, like insurance
carriers.
Carriers.
Yes.
Okay.
Yeah. So
like you're an insurance company and you provide insurance carriers.
We are an insurance agency. And so we are not a captive agency. We're independent, meaning we can represent multiple lines. So an example of a captive agency would be like State Farm. Right?
All you sell is State Farm.
Right. You sell State Farm or whatever they say you can sell, right? They'll have a couple of lines that they may be able to offer. I know like Allstate's the same way, right? Allstate is a captive agency, but they do have some things that they write outside of Allstate. I think they have UPC and some different ones that they write as well, just depending on what area of the world they're in. But great carriers, right? I mean, Allstate, you can't knock them. State Farm's the number one insurance company in the United States, I believe, for home and auto.
Yeah, but as an insurance agent, doesn't that kind of tie your hands up if you just dedicate to one? Like, say, like if I'm going to get in the business, in my mind, it makes more sense to go independent because you have way broader range of options for your clients. Whereas if you're State Farm, here's the price.
Yes and no. I mean, I would tell you, I mean, certainly having a national brand behind your name.
Remax,
right? You know, and in a lot of instances, you know, like Coldwell Banker and, you know, EXP and these guys are getting, you know, some national people know who they are.
Yeah.
As opposed to being just truly David Rush.
Yeah.
You know, or just Blake Baker, you know. So yeah, I mean, it's nice to have that national branding, but also, you know, understand that when you're buying a homeowner's policy or something like that, you're paying for those Super Bowl ads.
Yeah.
You know, you're paying for that, you know, their branding. So that's
we know a thing or two because we've seen a thing or two.
Yes, ma'am. Yeah. Anyway, so you know, we do shop it quite, you know, thoroughly. Us in the Harris County or the greater Houston area, I think we have over 30 different companies just for home.
Wow.
So we kind of narrow it down, you know, to who's going to be competitive and who has an appetite for what zip codes. And, you know, it'll tell us kind of the top, you know, bang for the buck companies, and then we will narrow it down from there.
You get some that won't even like touch Galveston County, huh?
There's a lot of carriers that will not write Tier 1, or if they write Tier 1, they're going to write it X wind.
What does Tier 1 mean?
It's just coastal.
Okay.
You know, Tier 1, Tier 2 is coastal, windstorm eligible areas.
Yeah, I have to have that. So
right now, so in this area, there are some carriers that will write the windstorm included in the policy.
I think that's what mine
yours
is.
Yes,
Yeah.
sir, yours is.
Very affordable. I was surprised at how cheap it was.
So the newer the home, the cheaper the insurance. It's pretty simple.
Yeah.
You know,
My homeowner's policy on this house was, I mean, dude, it was like $700 a year cheaper than my smaller, older house in Pasadena, which is further away from the water.
right. But again, it's, you know, it's a newer build. You're getting a lot of building code credits and things there. And they know the propensity for a water damage claim is pretty low on a new build. Mm-hmm. And if you do have a water damage claim, you've got the builder's warranty.
Because the builder went off the newest elevation certificate.
Oh, well, okay, that's flood.
Right. But the elevation.
Yeah. So on flood insurance, yes, it's based on, you know, what flood zone you're in. And, you know, and of course they build to the, you know, the latest flood models, you know, the flood maps.
Which are always changing.
They're always changing. You know why?
Because we're building more?
Well, we're building more, but it's kind of interesting. A lot of people don't know this. Flood insurance, or at least the flood maps, have really nothing to do with flooding or really protecting your interest, right? The Army Corps of Engineers does the flood maps, so they know in the event if we're ever invaded by a foreign country where we can put equipment.
Yeah.
Without having to worry about moving tanks if we have a big rainstorm and stuff, right? So, I mean, it's really, there's a topographical flood map for the entire United States, even like if a lot of people say, oh, I'm not in a flood zone. Yes, you are. Everything in the United States is in a flood zone of some sort, even if you're up on the side of a mountain, because flood covers mudslides. So,
really?
Yeah, so if you have a lot of rainwater running off, you can have a mudslide. Your house never takes water, but it gets completely wiped out.
So it should be called like rain damage collateral insurance.
Right. We can come up with another name. But yeah, so the easiest thing to remember is really flood just covers rising water.
Yeah.
So kind of going back to what I was saying, though, like water damage is more like I had a pipe rupture. Or, you know, or leak in my house. That's, you know, that's kind of a true water damage. Or obviously we had a ton of water damage claims with the freeze.
Oh, I bet y'all were just pulling your hair out that week.
It was a little rough.
Yeah.
It's a little rough. We, you know, I think as an agency, we were pretty blessed that we just didn't get hammered too much.
Yeah, man. Insurance is one of those things where when people are calling you, it's not because they're happy and want to talk to you.
Right. Even when they're just buying a new policy, right? I mean, it's a very intangible product. It's, you know, you give me a couple $1,000s and here's your piece of paper.
Well,
you know,
yeah,
it's not a feel good like, hey, I just got a new watch.
Right. But you don't need it until you do.
Exactly. It's like you know, got on the discussion the other day about carrying a handgun, right? It's kind of like a parachute. If you ever need it and don't have it, you'll never need it again.
Yeah.
so yeah. Unfortunately, you know, the insurance is a necessary evil. You know, Blake, it's not just to protect the homeowner. Really, it's protect we're protecting the assets of the people that put the money up for the house.
Our financial system.
Right. So
Yeah.
there's always two. I mean, if you owe money on the house, there's always two named insureds, Blake Baker and whatever bank you finance through.
Yeah. Okay. I never thought of it that way. That's interesting. It's almost like a social system that we kind of...
You know, I mean, the insurance industry and the banking industry are kind of in bed together in a lot of ways. So, you know, they're going to certainly protect each other's interest.
So example, say you have like something big, a big high-rise building or something. Mm-hmm. So if you have a developer borrowing the money to build whatever it is, say it's a big high-rise.
Right.
Do they have like people that they refer to get those insurance, like to write the insurance on that?
So those are all written through when you're talking about during the construction period, that's a completely different type of policy, even on a home.
So I guess the real question is, do banks and insurance companies work together and like towards the same goal, or is it?
Well, no, the bank that's loaning the money on this, let's say it's a mid-rise and it's $50 million. They're going to want to know that, hey, in the event of a fire, we're going to be made whole.
Right.
So there's a builder's risk policy that's in place for the duration of the build out of that building.
Okay. And who decides what policy and what company? And
you know, honestly, so if I'm the developer, or you know, in the everything's in my name, like, so it's well, let's say Blake Baker's building a mid-rise, and one day and So you're the one that's like kind of on the hook for everything, right? It's in Blake Baker's name.
Yep.
So the bank's just going to want to know that you have coverage in place for builder's risk in the event of, fire or a major windstorm event that kind of takes, or creates a lot of damage before the building is complete. Then once the building is complete, it's just a commercial property.
You have to write a whole new policy. Huh?
Absolutely. Yes, sir. Yeah. Builder's risk, in most instances, especially on a new build, you cannot occupy the property. It's a provision in there. Once you occupy the property, that policy is really null and void.
Yeah.
Yeah. You have to have a commercial property policy at that point.
So I'm going to tie this into my next question. What have you ever had times where you had someone go to file a claim, like say in that example, like if they just moved in and that voided a policy, but they didn't know it, and they go to make a claim, and you have to tell them like, hey, sorry, like this, because of the actions that took place between the time that we wrote this policy to now, you're not covered.
No, I can't even see that as a scenario. And the reason being is because if I'm writing somebody a builder's risk policy on a new build, I'm typically going to give them a quote on the completed project as well. Say, hey, quotes are only good for 30 days, right?
Yeah.
So if you're building a home and it's going to take you 4 months to build that home, I can do a builder's risk policy that will cover the build out. And then once it's complete, you kind of need to know, hey, what's the insurance going to cost?
Yeah.
And so we typically will provide a quote for that as well upon completion.
Yeah. If you get one, you want the other. So
right.
Yeah.
Right. So, you can buy builder's risk policies, as short term as 90 days. I wouldn't recommend it on a new build, but most of them are written kind of as a one-shot policy, and it's good for up to a year.
Okay. Huh. I didn't even know about builder's risk. I mean, makes sense. There's insurance for pretty much anything.
Insurance for insurance.
Yeah.
I mean, if you think about it, the insurance carriers, as they take on more risk, they're buying reinsurance.
Yeah.
They have these huge companies, and, again, this is above my pay grade. But if you have, let's say you have $100 million in risk just in maybe this zip code, right? You'll want to know that in the event of a major claim, you've got some reinsurance in place to help back your assets.
Yeah.
Yeah. So the insurance carriers buy insurance on the insurance.
That's crazy.
Yeah.
So as far as homeowners goes, what are some things people aren't doing and don't know about? Because I mean, dude, the reason I call you is because I don't know about insurance, and I know you know about insurance. So I trust you to write a policy that makes sense for me, as far as what my risks are with this house, my specific situation. So like, do you ever see people just skip out on certain coverages where you're like, ooh,
absolutely.
Like what?
Here's the thing. When we write a quote, it's general, right? I mean, I don't know everything in the world about every customer that I'm writing these quotes for. So, for instance, there's 3 basic policy forms in Texas for a homeowner's policy, for an owner-occupied homeowner's policy. There's a basic form. It's an HOA. It covers named perils. So, in other words, if something happens that's not one of those named perils, you don't have coverage. It's a basic policy form. Then there's like your house is either an HO3 or an HOB policy form, right? It's an open perils. So in an open perils policy, it covers anything unless it's specifically excluded by the policy, such as flood or earth movement. Okay, so those are obvious exclusions. But yeah, they're much more. Again, for somebody that is. Especially first-time home buyers, I always recommend the better coverage. I mean, if you own 50 properties and you're trying to cash flow properties and cut it, things, okay, I get it,
Well, you're diversified at that point. If one of them...
Right.
Yeah.
So I can see somebody kind of cutting some things out of a policy in that instance. But when you're talking about this is where you live, this is where your stuff is and all those things, you don't really want to cut corners on your own house.
Yeah, because you're all in.
There's some endorsements that... I always try and include water backup or sump overflow. So like you don't want to have to pay a full deductible in the event that your toilet overflows and just damages some baseboards and things like that.
Yeah.
So your house has it. It has a $5,000 water backup endorsement.
Oh.
So, you can file, and it's a much smaller deductible than the 1% deductible that's standard.
Meaning 1% of the value of the home.
1% of the dwelling amount, yes, sir. So if your house is insured for $400,000 and you have a 1% deductible,
$4,000.
You self-insured the first $4,000. That's what a deductible is. It's self-insurance.
Yeah. Yeah. That's such a tough call whenever they're like, well, what kind of deductibles do you want? And it's like, I don't want a high one, but if something small goes wrong, it's like, basically it's like if the house burns down, then it's like, okay, I don't care what the deductible is.
Right.
So yeah, I mean, I feel like on that situation, it may be worth it to just not even make a claim and just hire the work done.
I'm kind of
because that would then affect your claims history, right?
It depends on what type of claim it is. Typically windstorm claims do not really affect your claims history. They're not really act of God type thing.
Yeah.
Things that really kind of stick with you and follow you are going to be liability claims. So let's say you decide to put a trampoline in your backyard, and the neighbor kids are over here and they're all jumping in your backyard, and one of them falls off your trampoline and breaks his leg. And his parents are really mad at Blake. He should have never let these kids in that backyard, even though, it's kind of the parents' fault, right? But anyway, so they sue you. That's a liability claim.
It's like behavioral stuff, really. Like how do you conduct yourself as a human?
Right. What do they call trampoline is a it's something. It's considered something. It's a attractive nuisance or something. I can't remember the exact term, but it's like it increases your liability because you might have a little kid that lives next door. Oh, I really want to go jump on Blake's trampoline, and they jump your fence.
Yeah,
right?
like what are you going to do?
Right, but you're still liable. Believe it or not, it's on your property. So it's an attractive nuisance, I believe, is what they consider that. And like swimming pools, so that they have a diving board.
So what's the deal with diving boards? Are they even allowed anymore? Or they're just pretty much like it's a board, but it's like you might as well be jumping off a rock.
They're pretty much excluded now from liability. I mean, if your insurance carrier finds out you have a diving board or you put a diving board on a pool, they're going to cancel you.
Dang. Wow.
Yeah, just because, again, the number of claims. So it's kind of interesting. The number one claim for liability for a homeowner is a dog bite. That's why they ask the question, you have any large breeds of dog?
I was going to say, if that kid jumps over to jump on my trampoline, he's going to meet a German Shepherd.
And be eaten by a dog, right? So dog bite's the number one lawsuit for a homeowner, followed by trampoline accident.
Dang.
Yeah. So that you're seeing more and more carriers now that if you have a trampoline, they're just going to exclude liability for anything resulting from that trampoline.
So will they come out or they Google Earth you or what?
I think they're using Google Earth a lot, but a lot of the carriers, for every new policy that's written, they send out somebody to do a visual exterior inspection. Yeah. And they're looking for things like, a trampoline in the back or, swimming pool.
A fence around the pool. I almost had a closing hold up one time because it was my listing and the owner had no fence around his pool.
Right.
It was like you could walk down his driveway. There was nothing blocking your way.
Right.
And you could just go into the back pool area. Well, they were like, hey, we're not writing a policy on this until we have visual confirmation that there is a fence around the pool. So we had to, I think it's been a couple years ago. I think the buyer and the seller split the cost of a fence to put around. And dude, it was like this little, it looked like window screen. You know what I mean?
Right.
It's like,
and I think they're a little more strict on that than it can't be a temporary type fence. It's got to be at least a certain height. And,
yeah.
With a locking latch.
Yes. When my parents had theirs put in, we had to to get the city approval, I guess. We used to not have any sort of fencing, but we had to get black wrought iron fence. Mm-hmm. Even where you could walk around the back of the garage, we had to put a little gate there.
Right.
Yeah.
In Deer Park, I know to get a permit for a pool, they require you to actually have a little alarm on your back door going out to the pool. They require you to have a self-locking gate mechanism and an alarm in the pool, like one of the pool alarms. So if somebody falls in the water, it sets off an alarm.
What happens when you're just going for a swim?
Turn it off. Or take it out, right? But yeah, so there's, and of course, I don't think anybody leaves them hooked up.
I've never even heard of that.
Kind of a permitting thing, and again, it's not an insurance thing, right? We don't ask.
Yeah. Well, I mean, dude, if it saves one kid's life,
Well, I think a lot of that is just people justifying their jobs in the city.
Yeah.
Anyway, it's the cost of the permit. They gotta have some restrictions, right?
Yeah. Got to have something to do. So when rates go up and down, we talked a little bit about that earlier. Like if say you have a 400 credit score, the insurance company is going to look and say, hey, this guy doesn't pay his bills. He's high risk. At that point, they know they got to charge you a lot more. Is that kind of how it works?
Actuarially speaking, in other words, the guys that actually crunch the numbers and come up with the rates for the policies, there is a direct correlation between claims and credit score. The lower the credit scores, the higher the propensity for claims.
Higher the risk?
It's with home and auto.
Yeah.
Yeah, so
it's almost like shopping for an interest rate, really.
Well, it can be, and then again, there's a lot of the insurance carriers that they're not really so credit score driven on their pricing models,
but they're also probably not very coverage driven either.
Well, no, they are. It's just that they just say, hey, we're going to go after this group of people like young drivers, young single apartment dwelling drivers, male, under 25. High risk.
That sounds risky.
Yeah. In a 480 horsepower 5-liter Mustang.
Yeah.
Right? I mean, yeah, that's a fairly high risk.
Yeah.
That's not a question of if, it's when.
Do they look at your social media?
No.
Okay.
No.
Just a matter of time, though.
Right. Well, a lot of now, almost all the carriers are offering these, snapshot devices and things. I know Progressive is the snapshot.
Tesla has a thing in the software of the actual car on the dashboard. It's like if you want their insurance. I can't remember who it was on Facebook, someone in the industry, but they signed up for Tesla's insurance, and the Tesla gives you a safety score. So it's looking at how hard you accelerate, which, God, when I had mine, I didn't have that turned on, thank God.
Right.
But how hard you accelerate, how many times it has to alert you, like if you're on autopilot and it has to alert you because you're not tapping the wheel, and it gives you a grade. And if you get a bad grade, your insurance is like through the roof.
So most of the carriers now, when you do these snapshot devices or these, tracking devices, for lack of better words, that are tracking your habits, they're not really tracking where you go so much, but they look at like time of day that you operate your vehicle. And so one of the red flags for them is, hey, this guy's out till 3 a.m, right? And so that they can follow that. They can look at how many times you hit your brakes in traffic. So do you ride your brake, which means, you're up on, do you accelerate, decelerate, accelerate, brake. I mean, so they track that. They track how fast you brake. So in other words, if your car's going 40 miles an hour and you come to a stop real fast, it knows, hey, Blake just had to hit his brakes really hard for some reason. Right? Not paying attention, texting, drive, whatever. So yeah, that tracks all of your driving habits. It's kind of a scary thing.
It is, man.
It's more information than I want to give my insurance company.
Yeah.
For me, it's a very small discount. Yeah, it is a discount. So if you are truly that, very, 10 and 2 driver, both hands on the wheel, eyes straight ahead, put your phone in, do not disturb mode while you're driving, all these things, it might be worth a discount. I can just tell you, I'm not going to put one in the vet.
Yeah, I'd rather have a little bit more freedom.
Yeah. I don't, again, Big Brother doesn't know.
Yeah.
They don't need to know everything.
If I'm running late, I want to be able to do 80 down to 45.
Yeah.
Dang, that's wild, man. Like, how far does that go?
I don't know.
We'll see.
My daughter works for a company that does commercial vehicle tracking devices and monitoring.
I see those stickers on the back of like box vans. This is GPS monitored. We can only go 65.
Well, it's not only that. It's gotten, the technology on that has gotten so good that if you have a guy that's driving an 18-wheeler, they'll have monitors in the cab that are monitoring his breathing rate, where he's looking at while he's driving. Is he, in other words, is he just road locked, right? Is he kind of zoned out?
So it's like facial recognition?
And also the cool feature of it is, like, if you fall asleep, if your head dips, it immediately sets off sirens in the cab. Like, wake up. It's like, wake up, distracted driver, and that would scare me enough to have a wreck, right? Mm-hmm. But it also has video cameras all around the vehicle. Because, there's a lot of these people that are doing scams now where they'll have somebody like race around you, and then somebody come around them, and then this guy slams on his brakes and you just rear-ended somebody, right? So it happens more to commercial drivers than anybody. again, because they carry the biggest liability policies, and the Texas Hammer and all those guys know, hey, I can sue this guy for, his $1 million liability and the $2 million umbrella. And, there you have it.
Marketing genius, by the way, Jim Adler.
Yes.
He's to the point now where he doesn't even put his phone number on signs. It just says Jim Adler. Like on the freeway, it says Jim Adler, and it's a picture of him holding a sledgehammer.
Yeah.
Like he doesn't even have to put his phone number there.
That is branding.
Yeah.
Yeah. I mean, it is.
I wonder what he spends on marketing a month.
Oh, more than I make in
a couple
lifetime.
$100,000. Yeah.
I mean, I would imagine it's far more than that.
Golly. Yeah. Wild. Cool, man. Well, that's all we got for today. Anything you want to add?
We were talking about homeowners. So I want to circle back to that real quick. So some of the things that people don't consider when you have a house, let's say you're not a typical first-time home buyer, right? You've got stuff, you're married, you got kids, you have things in your house. Your contents coverage on a homeowner's policy, where it might have a blanket number there, say it's $200,000.
For the contents of the house?
For the contents of the house. Let's say, so you've got $400,000 on the dwelling and 50% of that amount or $200,000 on contents. There's still subcategory limits. For instance, my wife is a purse fiend, right? Well, I don't even know what my policy is on this, right? I know that there's a subcategory limit though for like handbags. And I'm way underinsured when it comes to my wife's handbags, right? And firearms. Firearms is another one. If you want coverage on all of your firearms, you need to schedule it. The one thing I would recommend people not schedule on their homeowners to get a second separate policy complete would be jewelry.
Right. You told me that.
Yeah, in the event that if you do have a lot of jewelry and you want to add it, if you schedule it on your homeowner's policy and you file a claim just for the jewelry, let's say you have a theft or, your homeowner's policy does not cover mysterious disappearance. So you had a party at your house and all of a sudden your wife's or your Rolex is gone. You have to file a police report, right?
Yeah.
So you have to have that police report in order to file your claim. Now, if you schedule that, and let's say you file the claim and they pay it. They say, hey, Blake, here's your $10,000 for your Rolex. That theft claim is going to follow you for 5 years. You have a homeowner's claim now.
Because they look at it and then say, okay, well, he got stolen from once. Who is he hanging out with? Who's he running with?
Exactly.
Because when you get stolen from, it's most of the time it's someone you know.
Oh, for sure. Or maybe your housekeeper, heck, one of your kids grabs it and hawks it, right? So bottom line is you're better off scheduling jewelry on a separate policy completely. Because then if you have a theft claim of your jewelry, you did not have a homeowner's claim.
Yeah.
So that would be, I always refer those out to either like Jewelers Mutual or Perfect Circle Jewelry or somebody like that actually writes you a separate policy.
Yeah. Okay. Good to know, man. Yeah. I would be heartbroken if I got a $10,000 Rolex stolen from a house party, man. I don't know what I would do.
Yeah. Believe it or not, I've actually...
You get a lot of those?
I haven't had a lot. Had a physician that had a Breitling... Mm-hmm. And I can't remember the other watch. Just he had some guests in his home and went to look for this watch, and a couple of days later they're missing.
Oh my god!
Yeah, and it was like $20,000 in watches.
Yeah, Yeah. So like, so you're saying the separate jewelry policy would cover, like, say if I'm floating down the river and I'm wearing my Submariner,
yes,
just because I want to look cool. Get drunk, hit a rock or something, break the face of it, or it comes off my wrist. I mean, dude, there's people at the river that just all they do is snorkel and look for watches and
right,
et cetera.
Again, that's really a question for whoever writes that jewelry policy. I don't. Okay. I refer those out.
Yeah. Okay. Makes sense. Okay. Cool, man. Well, thank you for doing this. I enjoyed it.
Thanks for having me.
Too. Yeah.
I hope it was informative.
Yeah. I think we'll see you tomorrow at the Remax 5-star party, the birthday party.
Yes.
I saw the email. So
yeah. Hope to see you there.
Yes, sir. All right, man. Thank you.
Thank you.